Hello, Chris Smith, Union Home Mortgage. What I want to talk to you about today is your escrow account. Heaven forbid, or not heaven forbid, you will. At some point, you will get a letter from us, your lender, or any lender, if it was somebody else, about a change in payment. So the first call that I get is, Chris, you said my rate was fixed. Why is my payment going up? I'm so mad at you. You lied to me. Okay, so let's hold on. Let's go back a second. You're on a fixed payment. There are adjustable rates, and if we did that, I would disclose, and there is a time. But that would be heavily disclosed, and you know it's coming. But on a fixed rate, I gave you a fixed rate. So for an example, I'm going to give you my calculator here. $100,000 loan. Thanks. Loan amount. 4% interest. 30-year term. Payment. $477.42 a month. So, Chris, we had a $100,000 loan. You locked us in on a 4% interest rate on a 30-year fixed product. My principal and interest payment just on the loan is $477.42. Will my payment ever change? You betcha. Your payment will change, because if you escrowed your taxes and insurance, if you didn't, then it won't, okay? If you escrowed your taxes and insurance, that payment will change typically every single year. Could go up, could go down. Now, did your loan payment change? Never. It's a fixed rate from the first payment to the 360th payment. If you did a 30-year loan, it's going to be $477.42. Can't change. Fixed rate. However, why does payments change then? Why does your escrow change? Because what's included in that payment? It's going to be your loan payment. Every month we collect that loan. You got to pay off your loan. The next is taxes, right? Real estate taxes. What happens with taxes? Every single year, your assessor goes out and assesses your property. If the assessed value of your property goes up, where just in society, real estate is having a booming year, the economy is going well, houses are selling, you can bet that your assessed value is going to go up every year as to what the market will bear. Your assessed value goes up, the tax rate's a percentage, guess what? Your taxes go up. So when we set up your escrow account, let's say at the time of closing, the taxes were, let's say $1,200, make math simple, $1,200 a year. So we take $1,200, we divide it by 12 in months. We have to collect $100 a month. Make sense? $100 a month, 12 months in a year, that's $1,200. So we set it up for the taxes at $100 a month. A year goes by later, the tax bill comes out, it's been assessed and went higher. That $1,000 went from $1,000 to $2,000. That's extreme, but it'll make math simple. So what happened? We divide that by 12, your $1,000, your $1,200, we went from $1,200 to say $2,400, okay? It jumped that much. Your $100 payment just went to $200 a month that we need to escrow, okay? So now we've been setting up your escrow account at $100 a month. We get the bill as a lender and we say, oh my gosh, okay, we've been setting up for $100. That's not going to do it. That's $1,200. We got to move the payment up to $200 a month to satisfy the needs of your taxes. So that is why it goes up. The same with homeowners insurance. When you close on your home and get homeowners insurance, just like when you buy a car, you need auto insurance, right? That renews. It's an annual policy. So again, make math simple. Let's say that your homeowners insurance when you close was $600 annually. Divide that by 12, that's $50 a month, okay? We're going to set up your escrow at $50 a month. So we have $50 a month for your initial escrow account for your homeowners insurance and $100 for taxes, right? So we had that $477 principal and interest payment. That's never going to change, remember? And we had the $150 in your escrow account for those two. A year goes by, taxes go up. Every anniversary date of your loan, because your homeowners insurance starts at the date of your loan closing. So every year at that anniversary date, you're going to get a new policy, okay? Let's say that $600 doubles and goes to $1,200. Now that $50 went to $100. Okay, so you just gained the $100 in taxes and you just gained $50 in your homeowner's insurance. Your payment's going to go up. We have to adjust it accordingly because we got to pay what is due. That is why payments increase. Now the next thing is they'll say, Chris, but it says I owe money. Why? Well, here's what it is. We have to pay that escrow account. So if we started funding your escrow account, because we collect and we park that money, they won't accept it month by month. So we have to park that money in an escrow account. Think of it just like a checking or savings account. Okay, there's no ATM, you can't swipe and take money out of it or a debit card, but it is there. That account is your money. okay? But it is there for the purposes of paying your escrows, taxes and insurance, okay? So we bank that money each month and put it in there as for an escrow reserve. When those bills come due, we fund it from that account, okay? Now it's paid in the rears. Taxes are paid in the rears, okay? Homeowners insurance is paid in the rears. So when I say rears, what does that mean? Just like your cell phone, your gas bill, your electric, you don't pay forward. The gas company doesn't say to you or the electric company, hey, I want this much money because I think you're going to use this much power. No, you use. So if it's the month of February, you use that electricity in February. March bill comes, they say, hey, you use this much electricity in February, you owe us this. It's the same thing with taxes and insurance, okay? So if it's 2019 and you're escrow and you're making your payment, 2020 comes out and they issue a new tax bill. It's in the rears. So they're saying, hey, we got this tax bill for 2019. This was the taxes, just the same scenario as before. This is what you owe for 2019, okay? So that's why we're collecting money based upon our best guess estimate of what it was. And then when it comes due, if we don't have enough money there and we were collecting that $100 for taxes, and then it went up, not by any fault of us or you, it's just the way it is, and that goes up $100, we go to pay the bill. Not only do we need to up your payment, but there's not enough money in that escrow account to pay that bill. Now, what do we do because we're nice people as the lender? Well, actually, it's law. What we have to do is, even if there's not enough money in that escrow account, we have to pay the bill. So you'll never have to worry about your taxes or your insurance being paid. We will always do that as your lender, again, if you're escrowed, okay? So we will make that payment. So the letter will say, hey, your escrow account was short. We covered it, no worries. It was short by $700, let's say. We funded that extra $700, that's fine. So this is what we'll do for you. One, your payment went up and you could write us an additional check for $700 to pay us back. Or what we'll do, because we're nice people, again, it's law, that $700, we can divide that and spread that over 12 payments. So over the next month, your payment just went up because of the taxes and insurance. Take that $700 divided by 12, and we're going to add that to your payment for that payback over the next 12 months, because that's called an escrow shortage. Okay, so that's how that works. It's an interest-free loan, really. There's no interest. We just pay that for you. Now, the good times, an escrow overage. So the same principle. We're escrowing for that $1,200 annual taxes, $100 a month. That's $600 annual for homeowners insurance, $50 a month. We escrow, you make your payments, all that money's accruing in banking in your escrow reserve account, and the next year comes out. It's not very often, but taxes go down. Homeowners insurance go down. When did that happen? Think back to 2008, 2009. Property values sunk, everybody's taxes went down. Not very common, typically they go up, but it went down. So then they get the bill on us as a lender and say, hey, we were collecting $100 a month and $50 a month for your homeowners insurance. Well, your taxes dropped in half. They're only $500 now. Your homeowners insurance dropped in half, so now they're only $300. So that $150 we've been collecting from you is really only $75. We only needed $75. So that additional $75 times 12 that's been surplusing in your account, hey, we're going to write you a check, okay, and send it back to you. It's your money. We can't keep it. There's laws governing this, okay? That's when you get an escrow overage. A lot of fun. Hey, guess what? Your payment went down because everything went down, and here's some money, okay? Good times, very rare, but it does happen in a down economy. So when do you know if you're escrowed? Again, you would know up front if you did an escrow because you would request that you did it and you would pay your taxes and insurance. If there's any doubt, you give me a call and we figure that out together. Again, any questions? This covered escrows, tax bills coming out. We covered a lot of ground here. Replay the video, listen to it. Again, if you still have questions, give me a call at any time. Take care.